What's up, guys? This should be interesting. I haven't really streamed a lot. Get my mic. I haven't streamed a lot here on YouTube, so this will be something new for me, but I want to bring this to you. Hopefully you guys can see me here. I'm going to make sure I exist somewhere out here. Here we go. Stock market crash live. Stocks down. All right, what's up, guys? Live. I normally am not doing YouTube live, but I thought I'd try something different here. Actually curious to see what you guys are seeing on my screen right now. I probably have like my portfolio up. So 17 watching now. Look at that. So you guys are wondering what's going on. Nasdaq's down over 5%, actually right at 5% now. S&P's down 3.71%. Just be patient as I get set up here. I want to make sure everything is working. If this works well, I will start doing this more often. It looks like it is. If somebody could do me a favor and let me know in the Discord. Actually, let's see if I can get into Discord over here so I can communicate to the community a little bit. How are you guys doing today? Give me a second here. I haven't live streamed in a long time, and I'm doing my best to help you guys out, try to get you some information. But I want to make sure you can see me and everything before I do that. So I'm live on TikTok too. Anybody fired up chat? Yeah, I'm going to assume that you guys can see me. I'm actually live on TikTok. I've never done that either. So right now the Nasdaq is starting to bounce 4.69%. If you want my opinion, guys, and I'm not a financial advisor, do what's best for you. I can't tell you how to manage your money or, buy or sell stocks. But I honestly believe that this might be capitulation. So capitulation, essentially, when the market's kind of given up. A lot of people, in fact, just last night I was having a conversation in Twitter, and there was people on Twitter basically saying, hey, we haven't seen capitulation, we haven't really seen a bottom, you haven't seen that panic selling. Usually you see like this panic selling where everybody's just trying to flush out, and some stocks are down 15, 20%, just nasty, where you can look at it and say, okay, this is a buying opportunity. Now, the market can always go lower, can take a leg lower. We've got lots of negative data. So here's what's going on. Yesterday, Jerome Powell and the Fed came out and said they're going to raise interest rates by 50 basis points. So that actually is good, because part of the reason the market popped yesterday, and this is algorithmic trading, so algos kind of kicked in, is essentially the Fed said no 75 basis point rate hikes. So we're going to have 2 months, the next 2 months, we're going to have 50 basis points. We pretty much already know that. We're going to have a month off in August, and then September, we're probably going to see another raise. And maybe, if inflation starts to cool, maybe it's only 25 basis points, maybe it's 0, maybe it's 50. But we know that 75 basis points is off the table. That's what made the market originally spike. Then people kind of come out of the woodwork. You listen to talking heads, and they're saying, well, the Fed doesn't really know what they're doing. They're not doing enough. They waited too long. They should do like a full point and kind of rip the Band-Aid off. The problem is we don't have the data. So on the 11th of May, we're going to get CPI inflation data. We're going to have a better understanding of what's going on there. I actually have some people, leave comments over there, ask questions, because I'm going to start going through questions here in a second. But, essentially the market's reacting to that a little bit. I think the market's just not happy. You're seeing e-commerce. You saw Etsy, you saw Amazon, you saw Shopify, you saw eBay. All of those are basically saying, hey, we're slowing down. The economy is slowing down. Host live together, decline. So this is my first time on TikTok live. I'm also on YouTube, so I'm just trying this out. But essentially, what you have now is you've got bears saying, hey, we've got to take a leg lower. If you look at the technicals, we still ran crazy hot. And if you zoom a chart out, go look at the QQQ. I can do it on my screen. You'll see this on YouTube. If not on TikTok, you can listen along. Now, if you look at this, we didn't actually even penetrate the lows, which are like 309. And I've been saying to the community, we've got a private community, Discord, Patreon, 305 is possible. And this is from a while ago. In fact, when it got down to 317 here in March, I was saying 305 is a potential area where it could bottom. It could always go lower. This S3 is down at 275. But what it's done is it's kind of come down and teased us with that S1. If you look at that closely, I'm going to zoom in here. It just kind of kissed that S1 right around 309, 310. It bounced off. It rallied all the way up to 329. I'm talking about the QQQ right now, guys. And then it sold off this morning, and you can see this candle. It got down to 312, and it's trying to find some footing right now. It's trading closer to 313. I was adding some stocks this morning. In Discord Patreon, I share all the buys that I'm doing, and I'm a long-term investor, so I'm not a trader. I'm not trying to time things and flip it for a quick profit. This is long-term investing where we're trying to build wealth, accumulate wealth over time. I've got multi-million-dollar portfolio, if you include my different taxable accounts as well as my retirement. My individual taxable brokerage at one point was much higher, but still sitting around, $1.3 million, something like that. But it's been a rough year. I'm down, I think at the low today, something like 30% from my highs, and that's painful. I've got a lot of growth. I do invest in dividends as well, so I've got dividend growth investing stocks. I've got some hyper growth stocks. So if you follow the YouTube channel, I cover a lot of these hyper growth like cloud stocks. I just did a video this morning on Datadog. I brought some stocks to the YouTube like Snowflake, Palantir. Before anybody was hyping those up, we were buying Palantir at $9 in Discord. Of course, I bought some more at 20, but I still got a good cost basis on it. And this channel talks a lot about those hyper growth stocks because that's where you're going to get that outperformance over time. Of course, in a bear market when the economy is slowing, those are the kind of stocks that get hit the worst. So I try to teach discipline, have some ETFs, have some dividend stocks, have growth, make sure it fits your risk tolerance. It's not everybody, it's not one size fits all in investing. It's very personal. Your portfolio should really match the DNA of what you believe in, what you want to invest in. And you really need to build a portfolio that fits your risk tolerance, your suitability. Some people might be, swinging for the fences, going for speculative stocks. They're down 50, 60% on their portfolios this year. Others might want safety. What's interesting about it, you can look at a 50-50 portfolio that has bonds and individual stocks, and they're getting hammered this year too. Bonds are getting hammered just along with stocks. Nothing like growth stocks, but still for bond investors, if you lose 10% on a bond where you're not really getting much return on it, interest on it to begin with, that's pretty painful, especially if you're in a fixed income situation, you're retired, you're using that as income. So we try to have balance. We try to teach, have cash, be disciplined, dollar cost average. Been nibbling, this whole time, doing the best I can with individual stocks. Bought some more, Snowflake this morning. I covered that video on Datadog. I was buying stuff even for my kids' UTMAs. It's been a wild ride. The algorithms are, they're pissed off and they're making the market gyrate. You've got all these things. You've got the market was running way hotter than it really should have got. It got ahead of itself. So you've got that. You've got the economy slowing down. You got inflation high. You've got the war with Ukraine and Russia. You've got China lockdowns and slowdowns there, COVID related. You have all these macroeconomics events and geopolitical events, and they all kind of pile up together. And it creates an environment for the stock market that's not positive. Wall Street wants to see the economy expanding. They want to see growth. This is part of the problem too. Pandemic comps. You think of like Zoom video, even like Etsy reported last night. They've got these very difficult comps where they had a lot of pull through growth, and now their quarters. When you report in Wall Street, you report year over year quarter. So we're reporting this quarter based on 12 months ago and comparing that growth. If we had massive growth, say for e-commerce, because everybody was working from home and not going out and not buying stuff from brick and mortar retail, you're going to have difficult comparables or comps. And that makes it really hard because Wall Street wants to see comps beat. So the pandemic just dumped that upside down. You had a bunch of stimulus where people were buying very speculative assets, and it created, a bubble. And it's one of those things in hindsight you can say, well, I should have done this. I could have done this. I should have sold. I should have bought. At the end of the day, if you're long-term investing, this is going to be a blip on the radar, but in the short term, it's painful. And, you're going to have bears say, oh, it's going to go 50%, stock market's going to go zero. If the U.S. stock market goes to zero, you're going to have bigger problems to worry about than your portfolio. you're going to have a zombie apocalypse or something, and I'm sorry, I'm on the TikTok, I'm talking to this camera, so I apologize. You're looking at the side of my head. I'll get better as I work through this. I'm trying to do something new here and something different. But I want to go through some questions. I want to make this interactive. You look at Datadog this morning, had a really strong quarter, was down initially, then it kind of popped, then it kind of sold off again. It's back to 109. We were looking at this one this morning. I did a video. If you want to check that out, it's 20 minutes. It goes deeper dive into Datadog, kind of what they're doing. I talk about the fundamentals as well as the technicals and go through some of this. But, I said again this morning, if the market stays bullish, this thing can go higher, but it's really expensive. You look at the EV/NTM, ratios on it. You look at even like price to sales. It doesn't have a PE ratio because it has no earnings. It's trading like a 35 price to sales, and usually you don't use price to sales for SaaS. So if you look at the EV/NTM multiples, it's something like I think it was 32 or something on the video. So it's really expensive if you're buying this thing over $100. We were buying it in Discord, in the 60s. I bought some even when the IPO came out in 2019. But when you look long term, you look at the TAM and how this company's trying to expand. There's a lot of opportunity. Same with Etsy. Some people are asking me about Etsy. That one, has been hit really hard, like a lot of these. And I still think that Etsy is actually a solid company longer term, but short term, they've got lots of issues to deal with. They've got the COVID comps that we talked about. You had the fact that the stock price got way ahead of itself. It was probably too expensive, trading at $307. But the PE ratio on it right now is something like 25. So it's not terrible at all. It's not a crazy expensive stock. The earnings last night weren't awesome. They were decent, and part of the reason the stock sold off is because the guidance was a little bit late. It's trading at $90. I think it's probably an opportunity. We just did chart day. I said S3, $89 possible on downside. This was literally on Wednesday, and here we are. We're literally at $90.04 right now. So, could it go lower? Yeah. S2, you got $79, you got $61. If the problem is people bought a lot of these stocks up here at 307, and now they want to blame somebody when it's down here at 90. If you're disciplined, you're buying this and you're dollar cost averaging, and you might be red. Like I'm red on Etsy too, but I certainly don't have any lots that are at $300 a share. So just want to see if any questions. Keep it up. Thank you. Let's go over here to this other screen here. What's going on here? I'm not going to be replying. I'm not going to type replies, but I will try to reply verbally here. So it looks like let me try to get rid of this. Dismiss pin message. Okay. So good. Okay. Thanks, Justin, for letting me know. I made 178 on Indy this morning. Why is the market down? I tried to explain in the beginning what's going on there. Looks good here, minus 35. I'm feeling fine. Doing okay. You good? I'm doing well. I'm hanging in there. Thanks for the updates. The market is a joke. There are no more investors. It is all run by bots and traders. There's absolutely no new information today than we had yesterday. Yeah, I get what you're saying there, but what's happening is people start to speculate on, well, the economy is slowing down. We're going into, sell in May and go away. So a lot of people like to sell stocks in May and go away. There's people that, people are usually gone on vacation. Their kids are out of school. It's generally a slower time. You start getting some of these earnings reports where not everybody, but a lot of people are lowering guidance and saying that there's additional supply chain constraints. I actively talk to members in the community that are in different lines of business. We've got people in our group that are, that work for Datadog, that work for, Salesforce, like these big companies. There's a couple that work in the semiconductor industry. And if you ask them about supply chain, they'll tell you that the supply chain actually has gotten worse and it's continuing to get worse. So a lot of the data that you get actually lags from the actual fact today. So it's possible. We're going to have CPI data on 11th of May. It's possible, that's in line. Maybe it's lower. Maybe we've already reached peak inflation, but there's still unknowns and the market's reacting to that. I said it earlier, and I'll say it again. I'm not a financial advisor. I can't tell you what to do with your money, but I've been in the market since the late 1990s. So I've been investing for 25 years. Long-term investing, buying opportunity, holding long-term. That's what I'm all about. And so anybody can do what I've done. I started with $50 a month, but when I look at my portfolio now and the millions that I've made in not only the stock market, but from businesses and just from, just getting out there and getting after it. I came from a family that didn't have a lot of money and just, I worked hard to get where I'm at. But you look at the stock market, when you look at capitulation, usually you can kind of just feel it. And I would agree. A lot of people were saying even yesterday on Twitter, like they didn't feel like there was true capitulation where people were just like, get that gut punch. A lot of individual stocks were really down, but you didn't really see that whole market flush. Now, was this capitulation this morning? Of course, I don't have a crystal ball, but I can tell you it felt more like capitulation today than it had prior in this whole sell-off. Could it take a leg lower? Absolutely it could, because there's technical damage. The way I look at it is it's opportunity to accumulate shares. I know it's scary, especially if you're a new investor, because you're thinking, oh, I'm down 50% already and the market's going to go lower. And you start panic selling. If that's what you want to do, it's your money. I can't tell you not to panic sell, because could the market go lower? Yes. But why did you invest in the first place? If you were trading, you already had a stop loss probably and you're out. But if you're investing and you're trying to say, make yourself have a better life for 2030, you're not at 2030 yet. And, it's 2022. You've got 8 years. So if you're still working, you can make money. You can accumulate shares. You can be buying more shares. And you've got time on your side, and we'll come out of the other side. True generational wealth is always made in downturns and bear markets. A lot of the money I have was when I was buying, in 2008, 2009, 2010. A lot of my friends were saying, market's going to go to zero, cash out everything, put cash under your mattress. And instead I was buying, and people made fun of me then, and they're probably making fun of me now. Like, why are you buying the dip today? Why are you buying? It's going to go lower. Always trying to time the market, like thinking that they're smart enough to exactly time when the bottom is and then, go all in. It's totally up to you. Again, I'm not here to convince anybody that they should go buy a bunch of stocks today. What I'm saying is, I was buying yesterday, I was buying today, I was buying last week, I was buying last month, I was buying last year, and I'll be buying probably tomorrow and the next day and the next week and the next month. I'm buying all the time, just slowly nibbling stuff. When the market's running hot, I'm buying bigger size lots. When it's cool like it is now, when there's danger ahead and there's a lot more reasons to be bearish than bullish. And I'm not a trader, and I'm thinking 5 and 10 year, total addressable markets and TAM. I'm just trying to accumulate shares the best I can, and I'm going to buy it at levels I think are right. So I'm going to look at a chart like I am here and say, hey, I think that Datadog can go here, or if I think Etsy's going to go here, and I'll buy on these different support levels and do my best. I'm not going to be able to time the bottom perfectly every time, but I'm just going to accumulate shares the best I can. You can see the market now. The Nasdaq's down about 4.5%. It's come nicely off of its lows. S&P's down 3.3%. The Dow Jones is down 3.15%. The VIX is hovering around 31. It popped 22% this morning. Dow tumbles 1,000 points. The headline. Nasdaq drops more than 4% as Wall Street sell-off intensifies. This was another key. Someone said earlier, we have no different data today than we did yesterday. Well, worker output fell 7.5% in the first quarter, the biggest decline since 1947. And we're seeing more and more of this stuff, like the highest, rate increase since, 2 decades ago, and all these big headlines. And that scares people. Not just retail investors like us. I'm a retail investor. You probably are too. But institutions, you got to think, if I'm a money manager, I'm thinking about, 1-year returns. If I'm a money manager, not all, but most, they're going to get compensated based on their performance on a calendar year. So 2022 from January 1st to December 31st. And so if I think the market's going to go lower, if I think I'm going to have an opportunity to accumulate whatever it is, I might take some chips off the table, and you could even have profits depending on what it is and when you bought it. If you bought some of these growth stocks 2 years ago and you didn't necessarily sell, sometimes you're forced a liquidity crunch where you just have to sell to raise capital, to raise cash. And there's also margin calling. So when you have these flushes with algos, people get margin called, and it can happen the other direction too. You get a short squeeze. All of a sudden it turns around the other way and starts going the other way. People have to start covering, and you'll see pops up. So yesterday you had, an algorithmic probably short squeeze, and today you're feeling kind of the opposite effect, where a lot of people probably went long yesterday, and now they're getting called, margin called, and pushed out. So there's a lot of volatility and a lot of choppiness when you have these types of moves on the market, and there's a lot of uncertainty in the market. The market wants prosperity, growth, and certainty, and we don't have a lot of that. yesterday we did get some, but then people started questioning like, well, does the Fed really even know what they're doing? Like they're way behind. Why aren't they waiting to get CPI data before they make these decisions? And they basically told us we're doing 50 basis point hikes for the next 2 months and we're not looking at 75. Some people don't like that. Some people want the Fed to raise the basis points, the interest rates by, 75 basis points or a full percentage. And, they're basically telling us they're not in a position, they don't want to do that. And so you've got bears and bulls kind of arguing, what's best, what should the Fed do, what's going to happen. And the reality is the market doesn't have certainty. There's a lot of unknowns and there's a lot of more reasons to be bearish than bullish. So people just don't put money to work, especially in high risk assets. So you think of growth stocks, you think of, speculative type stocks, things like that. Let's go through some more of these questions here. I'm going to read through some of this, guys. So we got some funny ones. C limited down. Well, everything's down because, especially in e-commerce, because you had, first Amazon, then you had Etsy last night, Shopify this morning got down below $400. Check the TSX versus the SPY. Should we be TSX stocks? I don't follow the TSX. I'm one of those guys. Like if you ask me a question I don't know, I'm not going to BS you. I'm a U.S. market guy, so you think of Dow Jones, you think of NASDAQ, you think of S&P 500, and I invest in a few companies like C Limited, Mercado Libre, but I don't follow those other markets very closely. There's just not enough time. There's not enough time to try to be a deep analyst in all those different topics. And I'm really, if you're new to the channel too, I'm focused on balanced portfolio development and management. Think of ETFs, you think of dividend stocks, you think of growth, think of spec. And my area of expertise really is going to be in the software technology and SaaS. That's, where I cut my teeth. I worked in that space for about 10 years. And so semiconductors, technology for my growth side. And then, I invest in a lot of boring companies too. I've got the, United Healthcares, the Home Depots, the Costcos, all those kind of names as well. So about 40% of my portfolio is dividend paying assets or ETFs in my taxable brokerage. Which is about 1.3 million now, which is down significantly from its highs. But, I did trim some, like last year in November, like for example, Cloudflare, when it got to 190, I sold my cost basis on that. Of course, then it went to 220 and now it's way lower. So I'm glad I took some of those profits and I rolled them over into something else. I think I bought some John Deere or, who knows what I bought with it. Stocks go on sale and everyone's running away. That's kind of how it works usually. People are getting free. Who's my spirit animal? Don't forget the 9th of May is coming. Yeah, that's Freedom Day. So, some people are speculating that Russia could do something stupid on that day. So hopefully not. Average down. Yep, DCA. Surprised there's not more questions over there. But hey, if you got questions, ask me on this YouTube chat over here. I like the following moon cycle. Do you buy your stocks at Walmart, Target, or Amazon? Oh, my socks. Costco. So what's up with that? Media spitting out fear. There's always fear, uncertainty, and doubt, FUD. Someone told me not to invest in Google because they might get wiped out by ad blockers, opinion. So what they're talking about with that is probably a little cookie thing. If you want my opinion on Google, I think it's an opportunity here. Of course, it can always go lower, and I can't tell you what to do with your money. I'm not a financial advisor, but I've owned Google for, I don't know, a number of years. I'm up nicely on it. I've had it for a long time. YouTube is a behemoth, of course. We're on YouTube right now, and the ad revenue has, taken over. If you look at all the TV ad revenue combined, YouTube's even bigger. In fact, Amazon now even has more revenue ad volume than YouTube, which is hard to believe. Guys, do you feel about EMS? I'm not sure what that is. I feel like I can't read. Do you think VTI is a good long-term hold? So VTI is just the total index. You're not going to outperform the market, of course, but it's safe. Assuming that over time the economy is going to grow, you're going to make money on it. It's just going to, basically give you, if it's me, I'd probably buy the S&P 500. S&P 500 is going to have a little bit more growth. It generally is going to outperform VTI, but there's nothing wrong with VTI. If you're going for like a retirement fund, like when I invest in my retirement funds, I generally buy ETFs. So, something like that, if you want some diversity and really just that broad market index, there's nothing wrong with VTI. I prefer S&P 500. Joe Smith says VGT over S&P 500. Yeah, I mean, if you want more growth, of course, that's going to be a better play. S&P 500 is going to give you more balance and diversification because it's going to have the oil companies and all the other stuff. Maybe you don't want that. If you just want technology, VGT is a solid one. There's plenty of other ones out there. What is your rank on those four? Datadog, CrowdStrike, Net, Palantir. I like all those names. I mean, it's going to depend on price, really. So when I look at Datadog, if you want my opinion on Datadog, go watch the 20-minute video I just did, because I could go into a tangent and talk about Datadog and basically repeat everything I just said. And I also have an exclusive 60-minute interview on Patreon Discord if you want to check that out. So I've got an hour and 20 minutes of Datadog that tells you all my opinions on Datadog. I like the company a lot. Has a lot of TAM. I usually don't play the rank game, but I'll oblige here just to entertain you guys. CrowdStrike, I've been in it for a while too, and I like it. The thing about CrowdStrike you have to keep in mind is that endpoint security does have competition. You think of Microsoft, think of SentinelOne. There's plenty of other players in that space, but I do like CrowdStrike, and I do own 1.5% of my portfolio or something's in CrowdStrike. Cloudflare, so what I did is I bought Fastly at like 18. It ran up to $100 or whatever. I sold Fastly for a 500 or 600% gain. I took the Fastly profits. I bought Cloudflare because I thought Cloudflare was better. And then I rode Cloudflare up to 190. I sold that, my original cost basis on that. So I'm sitting on Cloudflare right now as house shares from profits. Like, that's the best situation you can be in, free money making free money. And that's how you can really, accumulate a lot of wealth. And I'm not one for, trading and, going in and out of stocks. But when something goes parabolic where the story changes, with Fastly, I saw the story breaking down and I saw the stock go parabolic. And for me, that was enough to sell. And I saw a lot of exciting things happening with Cloudflare. All those stocks that you just mentioned are really expensive. So make sure you understand that when you're buying it. I explained that in the Datadog video today. 35 price to sales, which normally you don't use price to sales. You use like an EV NTM. But they're very expensive stocks. So just understand that they can always go lower, and you're taking on risks to try to get that potential reward. But me with the SaaS background, I like all those. Palantir is one that was a direct listing. We bought that one at $9 in Discord, and it shot up pretty high, and then it's pulled back, significantly, like a lot of those stocks. There are some concerns that people have with the stock sometimes. You think of dilution, you think of, blah, 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 blah. You know the story because there's a million YouTubers that do a Palantir video every single day. So I don't need to tell you anything about Palantir. I own the stock. I like the stock. I think the company is exciting. I think it's maybe a little bit overhyped sometimes, and we'll just leave it at that. But I do like it. I'm not bearish at all. I own stock, and I was the first person to bring Palantir to YouTube. So, it's not that I don't like the stock. It just got a little bit hyped, like doing the $1 trillion valuation, videos every other day, it gets played out after a while. So, are you long in Melly and C? Yes. Yeah, they're spec kind of stocks. They could easily be, 10x stocks, or they could go to zero. So if you watch some of my premium videos, like on Gumroad, I've got the new 10, and I've got the tremendous 12. It talks about some of these e-commerce opportunities, especially the international ones. What do you think about Amazon going into space and doing global internet? I think that's great. I think that's going to be cool. They're a long ways out from that, but I think it's good. Nasdaq's kind of dipping back down to that 5% range now, 4.92%. Do you know how to perform a Zephyr analysis? Not sure. I know what that is. Sorry. Even cheap stocks go lower. Value Investors said Baba was cheap at 250. Hey Connor, yeah, I was telling people to be careful with China stocks, and I'm not going to go into that and upset people because I've got stocks that are red too, So, without China stocks, I got out of those in 2019. I was telling people in Discord and Patreon, be careful with SPACs, be careful with the China stocks because of these risks. It doesn't mean that I don't like China or anything like that. It's just like, as an investor, you got to understand the risks, and the sentiment in the U.S. for U.S. investors was bad, and it got a lot worse, So what's interesting with Baba is like so many, people follow like Munger, and Munger, owning Baba. It's like, maybe maybe it is a value stock and it'll play out. I don't know. For me personally, I don't have enough time to even study all the stocks I want to in the U.S. market, let alone try to be a master of the Chinese market. So my daughter has a question. She's upset about PayPal. She's down 30%. She's thinking of selling and switching to AMD or Starbucks or dollar cost average in PayPal. Do you like PayPal? This is where portfolio development is really important. I think people get into this rhythm where they want to. What are your thoughts on Bitcoin? I'll get to TikTok here in a second. Let me answer this one, and I'm going to go over to the TikTok. So people generally, when they start buying stocks, they'll just like buy a stock. Hey, this looks good. This looks good. They start buying stocks, and next thing you know, they have this big mess of, they call it a portfolio, but it's just a bunch of random stocks. And there's really no plan or vision of what they're trying to do with that basket of stocks. It's just, oh, that's my portfolio. I'm one of those that I like to create a blueprint, I call it. So it's kind of like if you're going to build a house. If you're going to build a house, you need to have a blueprint so you know where the roof goes, where all the materials for the house goes to make the house. It's very specific. And you have a plan of what it's going to look like when it's done. For me, that's how you build a portfolio. And so you've got like ETFs. And if you're young, you might not have much ETFs. Maybe you only have 10% in like the S&P 500 or whatever. But your first couple $1,000 or whatever it is, depending on your risk tolerance, your age, suitability, all that. But you're going to have some sort of foundation, which are going to be ETFs. Then you're going to have some dividend growth investing preferred. So those are like the DGIF stocks. You think of like a Microsoft. It pays a dividend, but it still has really nice growth, and it's more of a tier one kind of quality name. You have a handful of those. And then you build growth and spec around that. So you might have crypto in your bucket. You might have this, that. But so many people just start buying, assets. So you're asking me about, should I, add PayPal or buy AMD or Starbucks? Well, those are completely different things. So Starbucks would be a dividend stock, more of like a DGI stock, dividend growth investing stock, right? AMD is going to be growth, kind of, high quality growth. I wanted to say mature growth, but it's growing quite nicely right now. So it's kind of somewhere in the middle. It's fast growth, I guess, not quite mature. Kind of a turnaround story since Lisa Su took over in 2014. That's going to be a semiconductor. So when I build my portfolio, I might say, hey, I want, and I've got playlists on the channel if you want to see how we build it. I've got a whole portfolio. We started from scratch back, I think, in March, and I was buying more stocks than that today. And the community voted on it. We've got ETFs, we've got dividend stocks, we've got growth stocks, we've got spec stocks, and so on. And you're basically building that portfolio. And then within that portfolio, once you build the macro, the high level, like I've got ETFs, I've got dividends, I've got growth, then you decide, for example, growth, you might go after secular growth trends. And so you might have fintech, you might have cloud, SaaS, you might have EV, you might have semiconductors, however you want to break down that blueprint. So when I look at that question, I say, well, what's your blueprint? And your answer is, I don't have a blueprint. Well, that's the mistake a lot of new investors make. You need to make the blueprint before you start buying anything, before you start trying to build a house. If you're going to build a house, do you just start throwing up materials, throwing up walls? Or do you have a plan to know exactly where all those materials go to build the house exactly the way you want it? You've got a blueprint. So you need a blueprint as well for your portfolio. So that's what I would say first. And then that would help you answer the question, should I buy more PayPal? Because it depends on how it fits into your portfolio. If you asked the question differently and said, which stock do you like better between AMD, Starbucks, and PayPal? That's a really easy answer because it's going to be the semiconductor one, right? So especially after the earnings report they just had. So my daughter has a question. Okay, that one we already got. Didn't Munger sell Baba? I think he sold some of it. I don't follow it that closely. What are your thoughts on Bitcoin? I do have some. I think I bought it in 2017, just as part of my spec play as kind of a hedge in crypto, and I've got some crypto. I know some people are, more bullish than others. I've got friends that have 80% of their portfolio in crypto. It's just, again, it's totally up to your DNA, your risk tolerance, your suitability. Like what you like doesn't mean it has to be the same as what I like, right? We can all like different things and build portfolios that fit us best. Ark followed the host, and thanks for the follow. Let me see if I missed any questions here in TikTok. Hey, man. Jake, what's going on, buddy? Top viewer. Nice. Love that. Hand wave. I have no idea what's going on. This is TikTok over here. And I started TikTok 2 months ago, basically going at it. I looked last night. I had 640,000 views on TikTok in 60 days. I've been on YouTube since 2019 and I've got 1.2 million. And I realize those views are longer because I have, some of my watch time. I've got videos that are hour long on YouTube, but that's pretty cool. Like TikTok, 600,000 views in 60 days. Of course, 200,000 of those were from one AMD video, or NVIDIA video. So they're a little skewed, but I think it's cool. So I'm glad that I joined TikTok, and I think there's some good stuff going on over there as well. So let's see what's going on. So creating a blueprint was probably the most critical step for me, and what my portfolio looks like today. Create a plan and execute, and stick to it. Thanks, Derek. That's good. Yeah, I know in the beginning when I started this stream, my bearings were completely off. I hadn't done one of these for a little while, so I do apologize. My plan is to do more of these, and I'll get better at them. It's funny because when I look at, we do live streams in the community every Monday, Wednesday, and Friday. So we've got a Patreon Discord. And on Monday and Friday, we do market news. Wednesday is like a chart day. We look at technical analysis on different stocks that the community wants me to look at. And those are very natural because I've done it so many times, but this whole setup's different. Like when I first set up this stream, I didn't know if it was working. Like I tried to set up my broadcasting software and I'd never used it before. So it's like, I apologize for the setup. What's going on, Connor? Excited for Circle to go public, watching them closely. BlackRock and Goldman are both big investors. Yeah, that should be interesting to see how that plays out as well. If anybody has questions on either platform, let me know. Otherwise, I can wrap it up. I just wanted to kind of give you my thoughts. So if you just joined what we were talking about in the beginning, essentially yesterday, Powell, the Fed came out, said that they're going to raise interest rates by 50 basis points. In that 75 basis points were off the table. The algos kind of kicked in. Algos gone wild. People had time to digest that. Usually it takes a day for people to digest, any of those big announcements. Same with earnings reports a lot of times for individual stocks. And, this morning you saw the algos kind of go the other direction and we're kind of having this washout. Now, if you really look at some of these charts, guys, if I go and look at like the QQQ, I showed this earlier, we're actually not even at the previous lows. We bounced off this S1 around 309. And this morning we got to about 311, 312. So, I mean, we kind of retested that. If you look at some of the individual names, we'll look at like AMD had a great earnings report. You can see it kind of bounced off of this 83 mark here. It kind of bounced up. And it's funny because we drew up these blue lines like, 2 weeks ago and said that this is the range that AMD was going to probably trade in. And if you look at this, it slightly broke this bottom blue line. And went, to this almost to the S1. So it was basically between this old S3 and this S1 here. And didn't get quite to 83. 83 is where I said to watch it. And it got to, 84 or whatever. Now, if you look at this, it rocketed up to this blue line and it broke down again. So it went to $100, rejected $100, and now it's trading around 95. But it got down all the way to 92 this morning. Another one to look at is NVIDIA. And I'm trying to look over my phone on this side. Talk about ARK. I'll talk about ARK. Yeah, I'll show ARK next, and we'll talk about ARK. So this one is NVIDIA. We had rejection up here too. And we said this is an older chart day. Anytime you see orange, it's an old chart day. Pressure below 263, previous R1. We said possibly 185, 175, 161. So, I mean, this could still happen. I know I did a TikTok on this one as well, kind of breaking it down. It's trading right now at 188. So, all these stocks, for the most part, are retesting those previous lows. Now, if you keep retesting those lows, eventually it's going to break and it's going to go to these lower levels, but it doesn't have to. It could just, try to flush out some of these final sellers, and we could see a bottom. I'm not suggesting we're going to rocket to all-time highs or anything like that. What I'd like to see is some stability. I'd like to see some stability where, maybe the market just kind of trades sideways to slightly up and we can accumulate shares over the next several months and, get our portfolios in better positions. At this point, if you have stocks that are red, you have to make the decision if you want to sell those stocks or if you want to basically add to them. So you need to look at the highest conviction stocks, try to build a blueprint, because a lot of you probably never did that to begin with. So make a blueprint. Like, I want my portfolio to look like this, and say it's a $5,000 portfolio. I want $1,000 in ETFs, and I want QQQ, and I want VU. Then I want to have $1,000 in Tractor Supply Company, John Deere, Home Depot and Microsoft, or whatever dividend types DGI stocks you want. And then growth stocks, you might be into, whatever you're into. You might be into cloud stocks, you might be into Tesla, whatever it is. Decide what you want to build out, and then look at what you own and say, hey, I bought this stock and I liked it at the time, but the story's changed. Don't sell a stock just because the stock is broken. Sell it if the company's broken. So a lot of stock prices are broken, and you can certainly sell. Again, I'm not a financial advisor. Do what's best for you. You can certainly sell. But at this point, a lot of these stocks, you look at SoFi getting down to like $6, $7. If you're going to sell it, you probably already got rid of it. If you haven't sold it yet, it's probably not the best time to sell. Could it go a little bit lower? It can always go a little bit lower, but you have to look at it and say, do you have conviction? Can you sleep well at night knowing that's going to be worth more? Now, I look at something like a SoFi, and I looked at it 2 days ago, the price to book. So if you look at banks, generally banks, they use price to book ratio. And if you look at JP Morgan and Bank of America, the last time I looked, those two banks were trading at a higher price to book. They're basically more expensive than SoFi, which SoFi has more growth. It doesn't have a dividend. That's obviously a problem in this kind of environment with inflation and interest rates. And it's not like a low PE type stock. It doesn't have earnings. So SoFi is going to be more of your like SPAC growth, speculative type name. Anything that was a SPAC is a SPAC. But when you really look at the price to book on it, I'm not saying that it's like it can't go lower or that it's going to rocket tomorrow, but I look at it and like it doesn't make sense if I own the stock to sell it at this level. I would have already sold it higher. If I still own it, it means I have conviction enough to own it. I'm probably either going to add to it, or I'm just going to sit on it and wait and see what happens. Another thing that people do, they make a mistake, is they're down 50% of the stock and they keep throwing cash at it, trying to fix the cost basis, and you can get in trouble. I talked to one of our platinum members. We had one-on-one calls last month, and he had like 18% in one biotech stock that he didn't really like that much, but he kept throwing money at it thinking he could fix the cost basis, and it kept going lower and lower. So be disciplined. You either just hold it and you're down, or you just sell the thing and move on. Generally, if you cut your losses, though, you're cutting your losses because the story changed, not just because the stock price has gone down or the stock broke. There's a difference between the stock being broke and the company. And of course, valuations do matter, and stocks were running really high last year, and things got way ahead of themselves. What are your thoughts? Okay, so we're going to talk about ARK here. Let me pull up ARK, and let's look at this. So ARK, interestingly, actually bottomed before a lot of this other stuff. So this S1 was at about $45, and it got like 45 and change, a little over 45 bucks. And we got down to like, December 2019 prices, I think, at one level. And it kind of rallied up here to 52 bucks, and it's actually sitting right now at 48, but 48 is still a couple dollars higher than the lows we saw a few days ago. So it's interesting to see that one hold up a little better. Of course, Datadog lost 50% of its value, pretty much overnight after earnings. So talking about ARK, what are your thoughts on Cathie Wood fund and ARK? So a lot of people keep asking about ARK. So the thing about ARK is that their time horizon is 5 years. If every time you hear Cathie Wood talk, she's talking about her 5-year vision. Now, here's what I will say. I'm a believer of we're in a technology revolution. I call it 4.0. So you think of like, the steam engine, is a huge technological revelation. It's just this huge thing that changed the planet. And we had all these different phases. We're at this new phase with technology. And I do agree with Cathie Wood on a lot of these topics. Like, for example, back in 2000, we had the dot-com bubble. And the reason is we had a lot of great ideas, but we didn't have the infrastructure to make it come to fruition. So we didn't have 5G. We didn't have, broadband internet, high-speed internet, gigabyte internet, things like that. And so 56K dial-up is not going to allow you to have autonomous vehicles and robotics and things like that. So when people, try to compare this situation to 2000, it's very different because we have the means with 5G, 6G, with satellite internet, like all the connectivity we have, Internet of Things. And we're in this revolution where you think of like NVIDIA with their H100 chips and how we're pushing the envelope, like Tesla, with their technology, their AI and their chips. And all these companies are pushing the envelope right now. And you think of robotics, autonomous, genomics. You think of, cancer research and cell technology, DNA, all that kind of stuff. I mean, all this stuff relies on semiconductors. So I call semiconductors the new oil. So I agree with the fact that we're in this technology revolution. And some of the stock picks that Kathy owns, I own as well. And I do own some ARK funds in retirement under my spec bucket. So I've got that blueprint. The ARK funds are what I put in my spec bucket. But then I have things like the S&P 500, and I've got more conservative assets in there. So when you look at the stocks that she has invested in, I own a lot of those individual stocks, but there are some stocks that she's picked that I don't necessarily agree with. But that's it's the same thing like your portfolio, my portfolio, you're going to have different assets that you have conviction in than I don't, right? So that anytime you have an ETF, you're going to have good stocks and bad stocks. And just like any other ETF, with ARK, you're going to have stocks that you really like and maybe some picks that you don't necessarily agree with. And I think that Wall Street in general just wants to kind of erase her from the history books. She had a huge run up into this, coming into this bull run. And those type of stocks that are speculative, that don't have strong balance sheets, those are the ones that get absolutely crucified in this type of environment. So it's probably an opportunity. I have this blue trend line here. I could see it going as low as like $36. And I think I did a couple of videos at one point. If you go back to this old channel, $35 is the low. So if you're on TikTok, you can't see it. But there's this channel back in 2018, and it's basically between $35 in the low and about $50. And it basically traded in that range, in that channel, for a good year and a half, 2 years. And then it rallied after the pandemic. So it got down to $33 March 2020. It rallied from $33 all the way to $159. This is ARKK ARK. And now it's trading at, under $50, $48.27. So could it go to 35? I mean, it could. Could it hold up here where that S1 was, closer to 45? It could do that too. So I'm surprised that it went as low as it did, but there's a lot of stocks that are down 80, 90% that I would have never guessed a million years, 6 months ago that would happen. So it's easy in hindsight to be an expert and say, oh yeah, this, it was easy to see that ARK was going to lose half its value. Like a lot of people would say, hey, ARK was expensive, 159, maybe it comes back to $90 or something, but most people weren't saying it was going to go to, 45, things like that. So those are my thoughts on ARK. If you just understand that there are some speculative assets, and you're swinging for the fences with ARK. You're going to have, it's kind of like a 10X when I do like 10X stocks videos. You can have a 10X return, or, the fund could close down. I mean, that's the risk reward you take. And that's what I would consider like in my spec bucket, hyper growth to speculative type growth. So, and it depends again on the person. Like I can invest in Datadog at a 32 EV/NTM multiple and be okay with it. And others might look at some of the stocks that are in ARK and say, well, this is cheaper than those other cloud stocks you're buying. But for me, enterprise SaaS is different because I've got recurring revenue. And for me, like I actually feel safer in SaaS stocks than I do in a lot of other areas. So, but I like, there's Tesla in ARK, there's Twilio, Roblox. I mean, a lot of those names I think have long-term potential, but it's going to take time for that to bake out. And you're going to need probably some time, maybe even a good year or more, for the market to kind of forget about this whole dilemma. And, memories are short. And at some point, ARK, I could see ARK doing okay. A lot of people think they're going to have to close down all this. I mean, if you look at the inflows, there's still people investing in it. I mean, you can see on your screen here, you can see all the inflows and outflows. I mean, there's still money going into ARK funds. And I've even bought some over the last several days, around that 45 range in my retirement. Again, it's speculative. It's a small percentage. So, 5% of my assets. It's not like I'm putting everything that I have into ARK funds. That's just me. You got to do what's best for your risk tolerance. Okay, so looks like we got a bunch of stuff over here. So really nice seeing this format on YouTube. I appreciate that. Would you say this is still a buy and hold moment for long-term investors of NVIDIA? I don't see why not. I mean, depends on your time horizon. I mean, this is the way you got to look at it. So you're talking about NVIDIA and Tesla. Okay, so there's two schools of thought. And as a new investor, this is the easy school of thought to say, I'm going to sell everything and then buy it back cheaper. And if you have like a $2,000 portfolio on Robinhood, it's probably really simple to do. If you've got like a couple $1 million portfolio, it's a lot harder to say, well, I've been in this stock, I'm up 700%. I'm going to sell I'm going to pay out like taxes on all of it and then try to buy it back. For a lot of people, that doesn't make a lot of sense. So if I look at, for me personally, I've got a time horizon of 2030. So I'm building this portfolio right now, this blueprint. I'm still adding to a lot of the names. And see, even some of the names that I'm down on, that I'm red on, I'm still trying to add to those positions, and I'm thinking longer term. So 2030 is my time horizon. I'm trying to grow this portfolio that I have, and I'll be completely transparent with you guys. So at one point it was, it was going closer to $2 million and it's come back a lot. I want to get that portfolio to $5 million by 2030. That's my goal. And even if I fall short and it's $4 million, then essentially, it'll still work because I can adjust the yield. But what I'm going to do is I'm going to convert at 2030 from the growth. I'm going to convert that more into passive income, and I'm going to make it a little bit, safer. And I'm going to have passive income. My goal is $200,000 a year in passive income 2030, and basically, live the lifestyle you want and live off of those dividends. And the dividends are basically going to increase each year. So you're going to outpace inflation with that dividend growth. And that's what my goal is right now. That's the journey you can follow with the channel. So subscribe if you're new to the channel. And the Patriot Discord members, I'm sharing my buys and sells and a lot more details on this kind of stuff. But that's what I'm trying to do. And so I'm putting money in every month. I retired. I had a job where I was selling software, making 150 grand a year plus commissions. I resigned at the end of 2020 to do this full time. I'm a contractor with the Motley Fool. I've got my own Patreon. I've got the different platforms. But, like YouTube, I think this month I'm on track to make $460 in ads. It's not that much money. So the Patreon kind of helps me to be able to do more of this kind of stuff and to try to help, young investors. But what's great about it, YouTube's free and there's different levels. We've got like the $10 level on Patreon that has an exclusive Datadog video right now. It's got the buys and sells for the community portfolio. And then there's different levels that go different price tiers depending on what you're trying to get out of it. We've got a Discord where, it's a community of long-term investors. We're not trying to trade in and out stuff necessarily. So the question is, do you still believe in long-term investing? Absolutely. And this is a great time to buy shares. Even if it goes lower for me personally, again, I'm not a financial advisor, but my opinion with my money, I believe that this is a good time to add, and I'll continue to add if it goes lower. Eventually I'll run out of money, but I haven't yet, and I'm going to keep buying as long as I can. So when I think of Tesla and Nvidia, what are those stocks going to be worth in 2030? That's what I care about. I don't care about what it's worth now. Your house, the house that you live in, if you own a house, if it had a ticker above it, you would worry about it more. And I guess it's, you could probably just look it up on Zillow and do a Zestimate or whatever now, but it's not following you around everywhere you go, like the value of your house. Like, the value of my house went down 5% today. With your stock portfolio, a lot of you guys, what you do is you open it up and you stare at your portfolio every 5 seconds. So right now you've got your app open and you're like, I'm down 6% or I'm down. That doesn't do you any good at all. I mean, that's not going to help you. And what's funny about it, you can go into a coma for 3 years, come back, and you'd be probably pretty happy, but that's just not how the human brain works. And so what I always say is that investing is really mostly psychological. If you can get past the psychology of, oh my God. So there's two powerful things in psychology. And one is fear of missing out. That's FOMO. You hear FOMO, right? Now, FOMO is dangerous because you're chasing some of the top, which is what we saw last year. So we had 25 million new investors. Some of you listening might be one of those new investors. And everybody's throwing money in. So you've got people are getting stimulus checks. Everybody's sitting at home in the pandemic. They're bored. There's no sports on. There's nothing to do. So it becomes kind of like the casino, like the stock market turned into a casino. A lot of this stuff got way out of hand. Now, the problem is what happens is that everything gets expensive, not just the whole market, everything. So you think of from high quality stocks from Amazon and Google and Microsoft to, growth stocks, everything in between, everything was elevated for the most part, unless it was like oil or, some retail like Macy's or something, but everything was at all-time highs. And FOMO just made it go higher and higher and higher. And what institutional investors will do is they'll feed off retail. So if retail is throwing more money in, they'll chase more money behind. So when you think of like the whole AMC, GameStop, Wall Street bet saga, there was this whole movement for a while like that we're going to stick it to the suits and stuff. If you look at the funds, the money that was pumped into those names, a lot of that was retail investors for sure. In the beginning, there's no question. But if you go look at the reports now and you look at the data, a large majority of that money was actually hedge funds and institutional investors chasing after those retail investors and then pulling the rug. And so unfortunately, the bag holders are us. Wall Street takes our money, they run, rinse and repeat. And you say, well, why would you be involved with something that does that? Well, because if you have a long-term horizon, it's a game that you can't really lose. The problem is that you're going to have these huge ups and these huge downs. I've been investing since the late 1990s, almost 25 years, and I've seen everything from the dot-com bubble to the financial crisis, 2008, 2009. I have a lot more experience than the average, YouTubers that talk about this stuff. And, I've got if you want to know my credentials, I sold real estate for a while. I sold software. So real estate about 10 years, software about 10 years. And now I'm doing this. And I've got a undergrad in international business with a focus on economics. And I've got a master's degree, MBA, Master's of Business Administration. And that doesn't make me smarter than anybody else, but just some people like to hear that to say, hey, who is this guy? Is he just some dude that is trying to make a quick buck on YouTube? No. I mean, like I said, I make $500 in YouTube ads. And I started doing this because I really want to help people. I feel like it's my calling. It's not that I'm trying to get rich off of it. I've already got money, guys. Like if I wanted to, I could go to passive income and I could easily get by with what I've got. I'm not one that needs a lot of material things. I don't spend a lot of money other than vacations. So, I'm here to try to help you guys. And I've seen these cycles before. And I don't want to try to hype you up to think this is the bottom and everything's going to be rainbows and unicorns from here. I think you're going to see volatility. But what I'm telling you is if you can look to 2030 and you're buying companies that have total addressable markets with quality leadership, stocks like NVIDIA and Tesla, these aren't meme stocks, guys. These are legitimate companies bringing in serious money that are going to continue to grow. And unless the story changes, if the story changes, you sell the stock. Those stories have not changed. The price has changed. The story has not changed. Jensen Huang and Elon Musk are two of the greatest CEOs on the planet. And I have a lot of money invested in those companies for that reason. So your question is, should I continue to hold NVIDIA, Tesla, and FANG? Absolutely. And a lot of my money is tied up in those names. Again, I'm not a financial advisor. So when I say absolutely, I'm giving you my opinion of what I'm doing with my money. I cannot tell you what to do with your money. I have to keep repeating that over and over, because I'm not a financial advisor. Make sure you do what's best for your money. If you have a short-term horizon, you might not want to be in the market. And if you look at my top 15 investing rules, rule number 1, don't invest money that you can't afford to lose. And people say, what does that mean? I don't want to lose money. It means that if you've got 20 grand you need for a down payment on a house later this year, or you got money from your insurance company to fix your roof for 20 grand, or you're going to get married in 6 months and you got 20 grand sitting there and you're like, I'm going to throw it in the stock market and see if I can make some money. That's the money that you can't afford to lose that money, and you shouldn't invest it. That's what that means. Okay. But if you have the right horizon and you're throwing in, $500 right now into the stock market, you're trying to grow that wealth over time, and you don't need that money to live. You're still taking care of the stuff you got to take care of at home and your needs and whatever, your rent, all that kind of stuff, and then your disposable income. So you got to focus on making as much money as you can, trying to cut out expenses, save as much money, invest as much money, and you can achieve financial freedom. I mean, I'm in my early 40s, and that's all I did. I didn't come from, a family with money, and I've been through plenty of these downturns myself. I mean, the market goes up, down, and sideways, and it's always easy again to say, I could have sold at the top and bought it back and all this stuff. If that's what you want to do, man, it's your money. Like, that's totally fine. There's a million ways to skin this thing, and you can be a trader too. There's nothing wrong with that. If you want to trade your way to success, go for it. It's just a lot harder. I don't know many people that are wealthy. I live in a nice neighborhood. All my millionaire neighbors, none of them got there by day trading stocks. If you can, great. I'm not bashing you if you can. I've never met anybody that could do it. But I know a lot of people that invested in quality companies or even index funds for years and saved as much as they could, improved their self-development so that they can make as much money as possible, had side hustles, whatever they had to do to make as much money, save as much money as they could, cut out expenses, cut the fat out of your expenses and your budget, and build towards the future. And these are the opportunities where some investors in retail take their ball and go home, and they blame it on the stock market and say, I lost 50%, the stock market's rigged. You can be that person, or you can be the person of, hey, the companies that I invest in, I have conviction in, and I've got a 20-30 game. I'm going to make a better future for myself and my family, and I'm going to invest because I believe in the future of U.S. economy. If you don't believe in the future U.S. economy, don't invest in stocks, right? But if you think that we're going to continue to grow, then, if you're buying index funds and quality companies, they're going to be worth more when you need the money later. And that's what it's really all about. So let's see. I bonds, you can make a quick 9% on it. I don't mess with bonds a lot. Bought some of the indexes today. Nothing wrong with that. When the hell we bought them? Well, maybe we already did. I guess we'll find out. I kind of showed some charts earlier. I'd rather own a couple ARK funds than ARK itself. That's one way to play it as well. There's 5 different ARK funds. So instead of just ARKK, you can have the ARK G for genomics. You can have the W for the internet. My favorite ARK is actually ARKW, just so you know, because I know those companies probably the best. I prefer choosing the best stocks from ARK. Yeah, I mean, again, earlier, if you buy an ETF, you're kind of assuming that they can do a better job than you can, and especially because it's active managed. So that's the other thing too. People look at ARK and they say, oh, well, they bought this stock, this sold this stock. It's actively managed, and you can get yourself in trouble by trying to copy ARK's moves. I think most people have figured that out by now, but I was saying it even last year when people were trying to follow their moves. Let's see here. Robo automation robotics. It's very niche for long basket for kids. Investing, I'm not sure. Oh, what would you buy today for your kids? Today I bought Roblox, Unity, WCLD. What else did I buy, guys? Anybody else know? I shared it in Discord. I don't have it off the top of my head. UiPath, Roblox, Unity, ARKK, and WCLD. I think those are the ones. So those are for my kids and their UTMA. So I just bought a share of each. I've got 2 girls, 2 daughters, little girls. So thoughts on Uber? I'm not an application guy. There's no recurring revenue. There's no loyalty there. If Amazon decides they want to do a ride sharing app and Prime members get a discount, I'm going to go there in a heartbeat. If Apple creates a ride sharing app, I'm there in a heartbeat. If Tesla starts making robo-taxis, well, you don't need Uber or Lyft anymore. So it's a tough spot to invest in. You might be able to make a buck or two trading, but if I'm thinking 2030, I think that gets disrupted. I think, and this is where you got to be careful because disruptors get disrupted quickly when we're in this kind of revolution. So Uber and Lyft disrupted taxis, and now they're going to get disrupted by robo-taxis, right? So you got to be careful with that. Quantum computing could disrupt a lot of the AI stocks and cloud stocks that we like now. So you got to be careful with that. But those are the kind of things I pay attention to as an investor, not the NASDAQ being down 4.5% today when it was up 3% yesterday. I look at that as just whatever, When the market takes another leg lower, then I look at it and say, oh, that sucks. Now where are we going to go next? Right now, we're retesting the same areas we were before. People are trying to figure out and digest the market. And maybe it goes lower, maybe it doesn't. It could bottom here. It's hard to say. It looked like capitulation this morning, but I don't have a crystal ball and I don't know for sure. So most people will tell you it's going to go lower, so just go with that. But I've been doing this long enough to know that when everybody thinks something's going to happen, it never really happens. Anything else on TikTok? Wish stock, I would avoid that one. I'm sorry if you own it, but just not my cup of tea. I don't even like the website, honestly. And I remember when people were buying that, it's kind of a meme stock last year. And I'm like, man, stay away from, and in Discord, somebody brought it up once. And I was like, just don't even bring that one up. You're going to lose money on it. So, and people bring up stocks all the time. We had one yesterday on Chart Day. Someone brought up a stock that I was like, I would avoid that stock. I can't tell you what to do with your money, but I'll be honest with you if I think something is higher risk than others. I don't tell you what to invest in or anything. I'll just tell you my opinion. And if something is more speculative than something else, I'll let you know. And it's just my opinion. You don't have to agree. So I've increased my Google. That's a good thing. Thoughts on Airbnb? I like Airbnb a lot. Had good earnings. It's expensive, of course. Upstart, I like Upstart as well. There's risk there with Upstart. When you think of Upstart, so here's the risk with Upstart. So Zillow Group last year, this is part of the reason the market started to deteriorate towards the end of 2021. Zillow Group basically said, we thought we were good at iBuying, but our AI wasn't as smart as we thought it was. Okay. Well, that's a red flag because it's like, okay, well, maybe AI isn't as smart. Maybe Zillow Group had inferior AI to say Upstart, but maybe not. So it's just something to be aware of as an investor. And trust me, I've got like 35 grand tied into Upstart. So I'm an investor and I'm red on the stock. So I thought it was a buy at 150 and it went to 75, you know. The other risk with that one, you think of Blend Labs. Blend Labs basically told us a while ago, like last 3 months ago, whenever they reported last, they basically said like the housing market's deteriorating. We're getting less and less loans. Now, Upstart doesn't do mortgages. They do personal loans and auto loans. But when you look at interest rates going higher, is that going to impact the buyer, the consumer? And we already know from Amazon, from Etsy, from Shopify that consumer spending is slowing down, at least in the e-commerce side. And we know that the economy is slowing down. So you look at Upstart and say, well, maybe people won't take as many auto loans and personal loans. That's a potential risk, right? You know, and then there's other risks that you can look at too. Like, for example, Zoom Video. Zoom Video has kind of had that COVID hangover, the tough comps I talked about earlier. So the comparables where they had this massive growth pull through during the pandemic, and now all their comparables, when they report year over year, they're very difficult to beat. Wall Street wants to see a company continuing to beat. Well, you're going to have tough comps with Upstart too, because the economy was booming, so that's going to have a slowdown. So you got those three risks, and I think that's part of the reason why the stock is where it's at, because the market sees some of those potential risks. So as a long-term investor, that stock is on my Tremendous 12 video. You can rent that on Gumroad, or if you go join Patreon Discord right now, you go to Google Patreon Fired Up Wealth. There's a $10 tier. It's going to give you a Datadog exclusive that's 63 minutes long, and it's going to give you a 90-minute Tremendous 12 video that has 12 stock picks that that could be 10x stocks in 10 years. Upstart's on there because it could easily be a 10x stock when you look at the total addressable market and the growth potential it could have, or it could be zero. So it's one of those high risk, high reward type stocks that can make you a lot of money, or it might not pan out. And when you're buying those kind of stocks, you're usually buying a basket of 15 or 20 of them, and you know that you're not going to be right every time. Peter Lynch isn't a hyper growth investor; he's more of a value investor. But he said if you're right 6 out of 10 times, you're going to be successful. In growth stock investing, even more so, because if you're successful on 10 baggers, you're making a ton of money. If you've got 10 stocks and 2 of them are 10 baggers, and say 5 of them, don't really do anything at all, and 3 of them go out of business completely to zero, you do the math on that, you still actually made a lot of money and outpaced the market and actually outperformed the S&P 500. So those are how I play those stocks, and that's why I have like 80 positions, because I try to hedge those positions. Some people like to have 5 stocks, and if they're right, they've got tremendous reward with that, but if they're wrong, it can be really painful. So it's my way of investing quite a bit of capital, because if I look at $1 million, $1.5 million portfolio, like that's a lot of money to me. I came from dirt basically. So if I look at even $1 million, like I don't want to have 5 stocks and have a $200,000 worth of a stock go to zero or lose half its value. I don't want to want that to happen. But if I buy 80 companies, even if a handful of them fail, I know that my target date 2030 that I'm going to make a lot of money over that period. I'm going to start losing my voice here, but I'm doing my best. Thoughts on Airbnb, Upstart, PayPal? I like PayPal. I mean, it's got a big user base globally, and they're doing buy now, pay later and stuff like that. But there's risk with that one. The economy is slowing down. So think about it. It's all connected. If people are spending less money on e-commerce, we already know that's true, right? We know from Amazon, from eBay, from Etsy, from Shopify, they've missed earnings or they lowered guidance. Well, PayPal, a lot of that's e-commerce. So if those guys are telling us that they're slowing down, well, what's going to happen? PayPal probably slows down too. The question is when is it the right price to buy? And if you like the stock, I've been nibbling it, and it keeps going lower, and at a certain point, you just stop nibbling it, or you decide it's not for you. I like PayPal. I've been in a long time, and I'm surprised it's priced where it's at. But that's what happens when we're really in a bear market, especially for technology. So understand that there's no catalyst to make this stuff just turn and go over. But the way you got to be thinking about this is it's a way for you to accumulate wealth. You're accumulating shares so that they're going to be worth more later. And some of this stuff's still expensive, so don't get me wrong. Like, it doesn't mean just go buy everything hand over fist. But if you're buying, you're working right now and you get paid a paycheck every 2 weeks. If it's me, I'm putting a little bit of money in, nibble, nibble, nibble. And if it goes up, great, high quality problem. If it goes lower, at least you didn't go all in and you can keep buying. And I know that's a hard mindset, because it's like you want to buy a stock today and have it go up every single day from this day on, but it doesn't work that way, guys. And if you think that it's going to be that way and that you're smarter than the market, it's called the overconfidence effect, Morgan Housel. Overconfidence effect, where you think that you're smarter than everybody else. You think you're smarter than me and all the other people that are listening to me right now. But the reality is that, the market's smarter than all of us, right? So you're really playing this long-term game of total addressable market, of management, of performance, and companies that are trying to, basically capture as much of this market share over this growth span of 5 or 10 years. And we're going to be in maybe a little mini recession. Maybe we have, so last quarter we had a contraction of GDP. Maybe we have another one. A recession is technically 2 quarters of suppressed growth. So we might already be halfway into a recession, but it doesn't have to be the dirty 30s where it's like, 10 years of doom and gloom. It can be a short-lived recession and we could come out the other side just fine. And that's what I think might happen. There's a good chance of that. Would you invest in hydrogen today? I don't really know that space. So, I'm invested in Tesla. I'm not an expert on EV or, the green technology space. We've got people in our group in Discord. In fact, you can join the free Discord tier. Go into the description of the video and there should be a link that says like Fired Up Wealth links. And if you click on that, it'll take you to Linktree. And there's something in there that says free Discord. And you can join, if you want to, of course, if you want to join Discord and get elite, you can do that too. But if you just want to just try it out, go join the free Discord. And I think you have access to the EV channel. And the EV channel, covers a lot of that stuff. And those guys are a lot smarter in that channel than I am on that stuff. So Derek kind of runs that, and he's kind of a little biased on Tesla, but he does a really good job overall. And Gustavo and a few other guys in there that have Plug Power and some of those other names that research them a lot more thoroughly than I do. So, do you think we go into recession? If so, how long? I think I just answered that, so I don't know if I read your mind or what. Thanks for all you do. Turn down the volume on CNBC. Listen to you instead. Appreciate that. Hydrogen's a myth. Take it from engineer. Okay. At least 10 years, if not more. I think there's risk with hydrogen, like how do you transport it and stuff like that. So I can see the bear case on it too. 1,800 today, about 2%. How's it going over here on TikTok? Wish stock, nothing else, huh? How many people we got? We got a handful on. No, it's interesting. We've got quite a following on YouTube compared to TikTok. If you guys are on TikTok, go follow Fired Up Wealth on TikTok. YouTube's still my focus, but I'm doing TikToks daily right now. So in fact, I did 3 TikToks Monday. I think 2 yesterday. I've done 1 today. So I'm doing at least 1 TikTok a day, just kind of trying it out. In the last 60 days, I've had 640,000 views. So it's going pretty well. And, just trying something different. So, what else is going on? You're right. I did read your mind. Yeah. So it looks like the market's still kind of hanging in there, that 4.6% range. Right now it's about, we got 2.5 hours before market close. Is that right? Yeah. 2.5 hours. If you have other platforms, we've got a Patreon and a Discord. I'm not trying to push anything. Like if you don't want to join, great. I'm not here to try to sell you something, whatever. Like you can go buy a shirt, you can do whatever you want to try to support the channel. But at the end of the day, I'm going to do this whether you do that stuff or not. So I try to do at least 2 YouTube videos. I'm trying to do more of those, trying to mix in some more of these live streams. I know that it can be really painful for a new investor because I've been where you're at before. So I started investing in the late 1990s, didn't know what I was doing. Back then, we didn't have the internet like now. I had to pay a broker like $75 or something every time I wanted to buy a stock. So you had to save up like $1,000 or, I had it set up where I ended up getting a Roth. I could pay $50 a month and they would take a 6% front loaded fee off of that. So I would literally lose 6% on my $50 every time I put $50 in. And then they charged me like a 1.7% back end fee expense ratio, kind of like a ETF has expense ratios now. But the VU is a 0.03 expense ratio. They were charging me like a 1.7% expense ratio plus 5 and 6% on the front end. So the first year you were losing like 7% just out of the gate. Just if you give them $100 and you have $93 that is really invested, and it's come a long way. Robinhood, made free trades for everybody in the US. And now we have fractional, in the Fired Up Wealth community portfolio, I'm buying fractional shares, which is cool. I can buy $50 of Tesla whenever I want, that's really cool. But I've been in your shoes before, and it's as an investor, especially if you're trying to be a long-term investor, you're already on an island because we're like unicorns. There's not many of us left. Everybody wants to trade in and out of stuff. Nobody wants to buy and hold and be like a true long-term investor, like Warren Buffett style or anything like that. Especially you think of growth stocks. I mean, they go against the trend because a lot of them are really expensive and things like that. Look at FANG stocks though. I was investing in FANG stocks when everybody bashed them the way they bash, Datadog and CrowdStrike now. And look what they became. I remember I bought even Microsoft back in like 2012 just because I knew they were getting into cloud with Azure, and I was kind of in that space. And AWS was kind of the king, but I'm like, there's so much total addressable market. If anybody can do this, Microsoft can. And I'm surprised Google took as long as they did, and they're still way behind. I'm surprised that Oracle wasn't. I used to work for Oracle. I'm surprised that Larry Ellison was kind of stubborn on that. I'm surprised we didn't get into the cloud side of it. Public cloud services. And there's a lot of companies, like even Apple. I always question, like, why didn't Apple get into that? There's just a lot of money to be made in that space, and cloud's in early innings. But my point is I know how hard it is for you if you probably don't have any friends that really want to talk about stocks. Your significant other, your spouse, wife, whatever, she doesn't want to talk about stocks. She probably falls asleep, rolls her eyes when you talk about stocks. Most of your friends don't want to talk about stocks, so like, I know what it's like, and that's why I created the community, the Discord, because we can sit in Discord and we can talk about stocks. We've always got a place to go, and we've got people from Singapore, from all over Europe, from Australia, New Zealand, all over the 40 different countries. So 24/7, 365, there's always somebody online, always there to talk to you about stocks, ask a question, bounce an idea, whatever. And you can't get that anywhere else, not where there's not biases or trolls, spam, all that stuff. That's what that community is that we created. It's free of spam, it's free of trolls. It's everybody wants to be there. It costs money because you have to have skin in the game. If it's free, what happens to free? Go into a Facebook group or go into a Reddit group. I mean, there's a lot of good and there's a lot of bad, and you can't control the quality. So you control the quality by you charge a fee. That's what the fee's for. The fee is a quality control method. If you say, well, why isn't it free for? If it's free for everybody, you just get a bunch of really crappy stuff in there, and it's hard to manage thousands and thousands of people, and it turns trashy. So that's why. Yeah. So it looks like 4.68% on the NASDAQ. Let's go back to some questions here. I own Adobe. Yeah. Under $400. I like that one. It's not my favorite stock in the world. And I did actually cancel my Adobe Creative Cloud, so there's that. But I do think that Adobe under $400 seems like a reasonable valuation. You could always go lower, so who knows, but the market is so bad. I'm about to buy some MJ stocks. Yeah, those are gotten really clobbered. I do have some of the spec, but I've been in like Planet 13 since right when it came public, and I'm still green on it, but barely. Like I'm just barely green on it. And at one point it was up. It was a bagger stock, and I I didn't sell it. And I've got Green Thumb, I got TrueLive, I got a bunch of those, but it's a small percent. My whole spec bucket is like 4.7% last time I looked, something like that. You guys looking into biotechs? I'm not, but biotech's such a tough space. It's hard. My first stock ever was biotech, and you know what happened to that one. So back in the late 1990s. Great content. We need more people like you, long-term investors. There's not really many long-term investors left. That's why I decided to go live. Because I'm looking at the market, and I've already made some buys, and it feels like the market's kind of like just sitting in that level now. And I'm like, okay, I've got some other stuff I need to do, but there's a lot of people right now that are panicking, that are worried. Like, I'm just going to jump live and try something different. I even got TikTok on this side. I don't know if anybody's watching or not, but if you are, hi guys. And just, talk to you guys and share some experiences. Like I don't pretend to be some guru that is going to, try to get rich quick overnight, or, tell you that I have a crystal ball to know exactly when the bottom is going to be tomorrow. Like it's really about researching companies, having conviction in those companies, investing in those companies, high quality companies with great management teams, with high total addressable markets, and then trying to build a portfolio that really fits your personality, your DNA, your risk level, your tolerance. And it's trying to buy and hold these quality companies and outperform the market over periods of time. That's what I'm about. And there's not many people left, especially when the market gets bad. Like I said, we had 25 million new retail investors. The last stat I saw from Tasty Trade during the pandemic, and like 21 million had already quit. So there's 4 million of you guys left that are new retail investors. So if you're one of those, the few, the proud, the Marines, the few, the proud, the retail investors that haven't taken their ball and gone home yet. So up 540% on Microsoft. Thanks for the house bill. Yeah, I'm doing well on Microsoft. Great content. Do you trade options? I do cash covered calls, and sometimes I've done a few puts, like, cash secured puts, like if I'm trying to get a stock lower, but 99% of what I've done is cash covered call. It's funny you asked me that, because last night it was like 10 o'clock at night. I got done with my workout and I spent like 2 hours going through Fidelity. If you don't use Fidelity, there's an options like trade builder, it's called. And it really makes it simple. Like, you don't have to be an expert or know the options change. You just like click, I want to do bull, I want to do call, cash covered call. And it makes it really simple. And I was looking for premiums, because I've got a lot of holdings that have decent dollar amounts and decent, number of shares, where I could do 10 contracts and things like that. You need 100 shares per one contract. And I was trying to find, some premium, thinking like, hey man, if I can get, $5,000 here or there from premium, I'll just take that money and invest, and buy some stocks with the premium I get from these covered calls. And it was terrible premiums. Like, I was going like a year out and getting like $1,000 premium. In 2021, I remember I did a Fastly premium, a cash covered call, and it was like $100 and some dollars. I think it was like 150 or even higher on a cash covered call. And it was like a 6-month expiration date. The strike price was like 150, and it paid me like a $5,000 premium. It was insane. And there was a lot of those. And even in Discord, I shared some of them there. SoFi, even at one point, I did $3,500 worth of premium. And now if you do that same options trade, you're getting pennies on the dollar compared to back then. So that's kind of a sign of the market you're in when it's bullish. There's people, there's euphoria in the market, and they're throwing money at it. You can get really good premiums on those. Right now, not so much, unless you go really far out, like you can go 2024. But then, the problem with some of those is like, you don't know what some of these stocks should be worth. They could be worth quite a bit more by 2024 too. They could pop out of it. So reminds me of March 2020 a little bit. Yeah. So many stocks to buy. Do you inverse Kramer? Be honest. I don't really follow Kramer at all. So I don't really know. So tips for going live. But yeah, guys, I'm going to probably end it there. I haven't had lunch or anything, but hopefully this was helpful. If you missed the front part of it, there's going to be a recording, but check out the link in the description below, or just type, Fired Up Wealth Patreon. Go check it out. Like I said, there's a tremendous 12. There's the Datadog. There's no Discord access on that $10 tier, but you can also join our free Discord. So for $10, you can get in our Discord for free, and you could get access to 2 videos and all the buys and sells. So buys and sells in the community portfolio, not in my primary portfolio, but there's a Fired Up Wealth Investing community portfolio, investing club portfolio. But I'm starting to lose my voice. I will try to do more of these if you guys enjoy them. So drop some comments. I know you're commenting right now in the stream chat. Drop some comments in the actual video that are sticky comments, and just let me know if you want more of these. Just give me some feedback. Drop me a like if you haven't already. That helps me out. And I appreciate it. I'm glad it was helpful for a few guys. Just so you know, I'm not selling anything. I'm buying stocks, and I'm not trying to time the bottom. I'm just buying levels. And today I saw some opportunities at levels, and trying to hold as much cash as I can in case it goes lower. If it doesn't, good problem to have. If it goes lower, I've got a little more cash. Eventually I run out of cash. I turn off all my apps and my screens, and I go do something else. And that's what don't stare at your portfolio every day, all day, every second, every hour. All that's going to do is cause stress. If you haven't seen the top 15 investing rules, go to the channel, subscribe, go check out the channel. There's tons of information on the channel. The top 15 investing rules right now are very powerful. I probably should have had that ready and queued it up for you, but you can find it out there. You can go to my Twitter too, and you can find it out there. But top 15 investing rules goes through, kind of my investing Bible of how to be. And one of those is, no FOMO, always have some cash, just common sense stuff. When you read through it, it's like, okay, that makes sense. I should have done that. Next time I'll know better to do it. And I made mistakes too. I've been doing this for almost 25 years. And if I could go back in time, there's things I would have done differently from last year too. But, one of the biggest ones on that top 15 investing rules is no shoulda, coulda, woulda. That means don't dwell on past decisions. And psychology is key, guys. Psychology is probably the most important part of investing long term. And it's probably one of the most powerful tools really just in life in general. This psychology, when you're going through tough times, how you can deal with that mentally. And I tell myself mind over matter, like just try to think about the future, try to think positively. It can be really hard. This is where a community can come in really handy, because anybody, if you're in the community and you're in Patreon Discord, you need to tell anybody that's willing to read your comment, what it's like. Because when there's days like today, nobody's panicking in there, nobody's freaking out, nobody's being a jerk, nobody's trolling. Everybody's just like, okay, well, where's the market gonna go next? Hey, what's your watch list? Like, what targets are you looking at? What are you buying? What price are you buying it at? Let's work together and try to do our best to buy some stocks and talk about, how we can improve next time for the future and learn from it, but don't dwell on the past, because it just doesn't do any good. So, is there anybody on here that's in Discord? Just drop a testimonial. Like, is it worth your time? Is it worth the investment? Do you recommend people checking at least the free Discord out to see if it's something for them? I know, like Connor, you were part of the community in the beginning, and I think you ended up going, you said it slowed down. Since you departed, I mean, there's tons of people that have joined, and the activity level has been, the highest it's ever been. The quality of our Discord community at this point is the highest quality it's been. And it makes sense, because the people that really didn't, and I'm not saying you, Connor, specifically, but the people that didn't want to be long-term investors, a lot of them, left. They took their ball and they went home. The people that really understand it, that really get it, that are trying to achieve financial freedom, they know the importance of the community and, what it can bring to them. And they know it's an investment in themselves, and they stick around. So the people that are still there are the ones that, that get it and that want to be there, longer term. So Matt Payne says 100% worth the Discord. I'm at work, so I can't type much, but it's a fantastic resource community. Yeah. And the cool thing about it is you can join for a month, and if it sucks, you just cancel. It's through Patreon. They use Stripe, and, you can give it a try for a month. And if it's not for you, you can cancel. So TikTok, you guys are really, really quiet, man. Disappointing me. My first TikTok stream, and I got, YouTube is going crazy over here, and I've got the only comments I got are about ARK and Wish. I don't know. I guess it's because I got 26,000 subscribers over there and only 4,000 over here. So, all right. So lost my shirt on GM in 2008. Apple went 5X. Good times. Yeah. I mean, win some and lose some. I appreciate everybody that tuned in today, all the comments and the chat and everything. It's been really fun to kind of talk, shoot the breeze with you guys and talk through this stuff. So I appreciate all you. The community is great. All you guys are awesome. I appreciate all the support. This channel is going to be much bigger with time, and I'm not in a rush to get there, because I know that there's good and bad with that. But I know that at some point people are going to figure out Fired Up Wealth is where they should be, and not be chasing the flavor of the month. And the channel is going to explode. It's just a matter of time. So, if you haven't subscribed already, do, because we're really just getting started. We're at 26,000 subscribers. Been doing this since 2019. Partnership with Motley Fool now. So, this isn't sponsored by Motley Fool or anything, but there is a link down there. If you ever want to join that, you can check out their Motley Fool stock picking service. There's a link basically. And every time you sign up for that, or you even give them their email, I get a kickback for it. But that's how, I can kind of support myself to do this as my income. Even though I could live off my dividends, I've decided to actually sell my dividend stocks, buy growth stocks, and try to outperform over the next, 8 years to 2030, so that I can connect better with you as my audience. If I'm buying, all dividend stocks right now, and you guys are still in your accumulation phase, it's not really that much fun for you. So I want to have skin in the game where I'm buying the same stocks as you are, like the CrowdStrikes, the Datadogs, the Snowflakes, the Zscalers, the Mercado Libres, the Teslas. And I want to, I know that not all those picks are going to be winners, that we're going to have losers in that basket. But overall, we're going to outperform over 2030, and I'm going to grow what's a decent amount of money of, $1.5 million, but I'm going to grow that thing into 5 million. I'm going to be adding money to it as I go. So that's not all gains. I'm going to be putting in, as much as I can every month. Hopefully I can put in like $5,000 a month and then invest into my portfolio. But anything that I make, once I pay for my bills, my necessities, my kids' stuff, any cent I have, it literally goes into the stock market. So that's kind of what I'm doing, and I'm going to continue to invest and think about the future and think about long term. And if I'm wrong, I'm wrong. But I believe in the future of American economy. I believe in the future of the companies that I invest in. I know that I'm not going to be right on every one of those, and that not all of them are going to make money. But my basket of stocks is going to be worth more over time. The host is inviting you to go live together. What is the name of this? They canceled. I was going to read the name. It said it was a funny name. So anyway, hey Eric, just tuned in. Blake, this is going to be recorded. I should have announced this on Twitter. That was kind of a mistake on my end. I just kind of like hit record, just hit stream and started talking. So whatever. Next time I'll be more prepared. What does this say? I like the ones trading way under cash. I missed whatever that conversation is. Motley Fool, no. Hey, the thing about Motley Fool, guys, is that they teach long-term investing, and they're investing in growth companies, and they've had some great picks. Anytime you are a stock picker, especially in growth stocks, you're going to have some that win and some that lose. And of course, in 2020, 2021, there's a lot of those names that did really well, but they went really high and made money. But if you didn't sell, now they're worth a lot less. So, and I've got some of those names myself, but no hating. I mean, and the thing about it, there's tons of independents like me. So there's tons of people that are associated, with these different organizations like Motley Fool, and it's like we all have our own opinions. So like my opinion is not theirs, and like the stuff I do on the channel is not, they don't tell me what to make or what to do. I just do what I want. And then I basically, it's my opinion. So everything I share is my opinion, and it's not influenced by anybody else, which I really like. It's been a great partnership though. And some of the highest quality members that we have in our Discord community, have really come from Motley Fool, and there's a lot of great stuff going on there too. If you're new to investing, you might see like, oh, there's a pick that didn't work or this and that. But this is where it comes back to like, that's why you have to learn how to be an investor. And this is what I try to do. I try to take it to the next level to like show you how to actually research yourself so you have conviction. And you're not going to be right every time. But if you just buy a bunch of stocks and don't do any research on your own, there's no way you can have conviction and sleep at night when the stock goes down 20, 30, 40, 50%. If you really believe in the future of the business and you understand the company, you have a different perspective of what that stock might do, longer term. And it is a long-term game. So you're not measuring it by months, you're measuring it by years and, even decades when you think of investing. So keep that in mind. Same with Kathy Wood and ARK. I mean, a lot of people think she's wrong, but we won't know the answer to that until, her time horizons, which is 5+ years. And that's the same way with any kind of stock picking service or anything like that as well. So keep it in mind. My E-Trade has given me a migraine. Just don't look at it. Yeah, man. So NASDAQ's down 4.5%. We'll see if we get a little bit of a pop in today or not. Maybe we take a leg lower, hard to say, but I'm not really panicking at this point, guys. I mean, we pretty much are retesting the same levels on most of these names. In fact, we looked at ARK. ARK's at $48. It's still considerably off. Well, not considerably, but it's a couple bucks off of its lows from the other day. Accept all cookies. Why not? There we go. So it got down to like 46, and it's trying to come back in that level, but it's at 48. It's a couple bucks higher. So it's interesting to see ARK being not at new lows when everything else is kind of selling off. So that could be nothing. It could be a coincidence. Could be a sign. A lot of times the higher growth names kind of hit the bottom and crash and burn faster than the rest of the market, and it has a pull-through effect. But some will argue that Apple has more downside that has to go to its 200-day moving average before the whole market can heal. Let's look at Apple. Apple, yeah, I mean, this is still holding up pretty well. It's at 157. If Apple breaks down and goes to its S3, then the whole market's in a lot of trouble. So, I mean, you can see where there's still going to be downside. But again, there's no reason to panic about it. If it happens, it happens. Like, what are you going to do about it? Like, if you can't take the risk of your portfolio going down, like you shouldn't be in stocks probably in the first place. And, you can hire somebody to manage your money, or just, put the money under your mattress and lose 9% a year on inflation if that's better for you. I mean, you can go buy bonds right now and be down on bonds too. So there's not really any safe haven at this point, guys. But these kind of sell-offs, like they're not, people are thinking like this is unusual or like this shouldn't happen. I would agree that algorithmic trading has made it more volatile, but the reality is these kind of sell-offs, they're not uncommon. You look at, the last 100 years and you have runs up and runs down. We ran really hot. You shoot to the upside more than you should, and you kind of pull back, and oftentimes you go to the downside more than you should. And you could easily argue, like, I'm going to show you one last thing to close out here. There's this QQQ. So you look at the short-term chart and say 314. Okay, that's, the low on this was 309. It's actually, 314 right now. Let's zoom this chart out once for some perspective. This is 2010. And you can see that basically this period right here, it basically traded sideways. So this is the .com crash. You can see up here, it basically crashed from up here somewhere. I'm having a hard time with this right now. So this orange line's like 120. So here we go, 120 bucks. 120 bucks .com bubble. It went from $120 to $19. So of course, if you're trying to compare this to then, you're like, oh my God, this is going to happen. I'm so scared. Fear of losing everything that's full. If you believe that, then, if you want to sell. That's why it's great as an individual investor, because, you can do what you want with your money. But you look at this, and this is where, people have to look at history too and understand. This went from 120 to 20, and it traded from 2002 to 2008, it was literally, dead money. It went up to $50 and then basically retested back here. Then it ran from $25 all the way up, all the way from $25 to $408. With some bumps along the way. But you see, if you look at a chart, it's going at like a 30-degree angle up, and that's kind of a healthy growth rate. You can see how that chart starts to kind of go at this sort of angle, like a 45-degree angle here. And you say, well, if you do a retraction as a chartist, you could look at this and say, oh, well, it has to come down to $245 or whatever to even this trend, so that if I draw a trend line, that it has to look something like this. And you see these, you can go on Twitter and see these charts, and maybe they're right. I don't know. But you see all these charts like, oh, well, there's this trend line here, and so it has to go down here. Well, how many pandemics do we have in there? And the answer is we don't have any, right? We don't have any pandemics to view. So we did have some pull through and growth. The question is how much? And then the question, a bunch of stuff we can't answer, like what's it look like on the other side? How much do we slow down? What happens with Russia, Ukraine? What happens with China? What happens with interest rates? What happens with inflation? What happens with this and that? We don't know. So it's easy to be a naysayer and say, well, this is going to go down. I'm just going to sell here and buy it back here. And that might work. And if that works for you, great. For me personally, I look at it as this is 2022, and I can zoom this chart all the way to the right to 2030. And if I look at history, there's ups and downs, but if you're accumulating money during this period, you're buying this whole time, you're now wealthy because you were buying shares this whole time and believed in what you were doing, and then it popped, and this is where all this money was made. And so you want to be buying during any kind of bear cycles, and maybe this thing's short-lived. Maybe it lasts for a longer period like it did back then. But if you've got the right time horizon, you're going to make money when it comes to the other side. And it's easy to say, well, I'll just wait. I'll wait until things clear up, and then I'll just throw my money. If that's what works for you, great. But what I found is that just constantly buying, trim stuff when it gets parabolic, take that cash, be smart. It's not just like buy a stock and just hold it forever. It's not that at all. Like people say, oh, here's 5 stocks I'm buying that I'm going to hold forever. It always pisses me off. It's like, no, you don't hold anything. You're not married to your stocks, man. Like if the story changes, you sell the stock. If the stock goes parabolic, you trim the stock or you get rid of the stock and take the profits. But, long and long, I'm looking at this at a 2030 time horizon. I'm saying I'm still going to make money, and I'm not invested all in the QQQ either. I'm invested outside of this, and I've got things like, Tractor Supply Company, John Deere, Home Depot, stuff that's maybe not necessarily in the QQQ. This is the NASDAQ 100, right? So technology had a hell of a bull run. It's going through a digestion period. It certainly could have downside. I'm not saying it's going to go to there. I'm showing you an example of what the charts you're going to see on Twitter. So if you go on CNBC or most social media, they're going to show you these charts and scare the hell out of you and say it has to come to this line. Nothing has to happen. It's good to know as an investor that there's possibilities that stuff like that could happen, but nobody really knows. I don't know what's going to happen. You don't know what's going to happen. Jim Cramer doesn't know what's going to happen. Kathy Wood, nobody. What I do know is that we're in this technological revolution and there's going to be money to be made over the next 5 and 10 years, but I don't know what the hell that looks like along the way. And so you either are an investor or you're a trader. If you want to be a trader, that's totally fine for me. I like buying companies, getting to know the companies really well, studying those companies, analyzing them, having conviction, and having ownership in the business. If I own a company, if I own my own business, I'm not trying to buy and sell it all the time when the market's good or bad. I'm invested in that business, and I'm trying to make money on the other side of it. Same with your house. Like, you don't buy your house usually as an investment, but it doesn't have a ticker. You're not looking at the price of your house 24/7, 365, going, oh, the price of my house fluctuated. And that's the problem that we have. It's that psychology of like, is it going to go lower? What's going to happen? The Nasdaq's down 5%. Oh God. So that's just my take, guys. I'm not panicking. I know a lot of you probably are. And at the end of the day, do what's best for your money. The market has a way of basically taking retail investors, getting them to buy when everything's running hot, and then getting, buy high and sell low. And you're supposed to be buying low and selling high. And so just be careful, do what's best for you. I'm not a financial advisor, but be careful of, panic selling or changing your portfolio. A lot of people are like, I'm just going to sell this and I'm going to go into oil stocks, and people chase these trends. Right now, growth stocks are out of fashion, and they might not be in fashion for a long time, and they could go lower. But eventually those will be back in fashion, and they will have another run again at some point, especially the high quality names. And so it's just a matter of what you want to invest in and what your time horizon is and what you believe in and what you want to support. So you guys are really quiet on this side. That's all I got. Down 5%, a little bit more. Maybe we'll see some new lows here before close. Hard to say what happens here. The VIX is at 31. I appreciate you guys. Technology has a stomach ache. A bad stomach ache. Kathy definitely doesn't know what's going to happen. There's a hater. So I think we're good, guys. I appreciate your time and attention. Definitely subscribe if you haven't. Checked out the other platforms. Check out the link in the description. Check out Patreon, Discord. I'm losing my voice, so I'm going to cut it off here. But I'll keep you posted on what's going on, and hope you have a great rest of your day. Take care.